So how much money can I withdraw from my investment portfolio in order for that to be sustainable so I don't have to worry too heavily about running out of money in retirement? Well, here at the Parkmount Financial Partners YouTube page, we're going to be talking about some research and some techniques in the field of financial planning that can help you get to a better answer of that question. First of all, we're talking about the 4% rule. So what is the 4% rule? I've certainly seen it in the news and financial journalists talking about it. The 4% rule is actually based on research from 1996, where they took a hypothetical scenario and looked at historical data of someone going into retirement with a 50% stock, 50% bond portfolio, withdrawing 4% in year one, and then adjusting that amount of withdrawal for inflation every year throughout those 30 years. The only thing that changed was the market environment. They simulated all 30-year periods in random successions to see, okay, what withdrawal rate would have been the quote-unquote fail-safe plan for that historical data. And what they found was that 4% was what seemed to be a pretty reliable strategy. In all the data that they looked at through scenarios, 96% of the 4% withdrawal strategy ended up outliving their money. And actually, in the average 4% scenario, the wealth actually grew through that 30-year period while withdrawing money for living expenses. And so that was the origin of the 4% rule, and it still is pretty solid research to consider when formulating a financial plan. More recent developments have questioned the 4% rule. Some researchers have said that that research is a little bit outdated because it is from 1996, and a lot of the periods that they were looking at were from the 70s and 80s, where interest rates were actually really high compared to what you might find in a bond portfolio nowadays, which might suggest that the 4% rule to adjust for today's environment might have to be smaller to match what might be considered comparable outcomes in some of that older research. Now, that's not so great news. Some good and better news is research on different adaptive withdrawal strategies and how implementing some of these techniques might actually increase your ability to withdraw from your portfolio and have that be sustainable throughout your retirement. And all the Jonathan Guyton and some other researchers came up with a technique called guardrails. And guardrails suggest that in their research, it suggests that 5% is a possible sustainable withdrawal rate with implementation of some of these more adaptive strategies. For example, if the markets are going down, it says if your market withdrawal rate is increasing by 20%, so you're increased up to over 6%, then you may have to decrease your actual spending rate. Now, there are specific rules and tactics and a playbook for how to implement this in real time, but it does offer an encouraging way to help people planning for retire to ensure a stronger level of confidence in their spending plan and actually to potentially increase the amount that they can take from their portfolio just by being more mindful. Now, this doesn't completely eliminate risk. It's just an adaptive strategy. One of the biggest risks people face in retirement is excess withdrawal risk and just not even monitoring their withdrawals or spending patterns and spending way too much too soon and running their portfolio down too fast. There's also, timing risk. When you retire, no one can control what happens when you retire. And more importantly, these are research done on a 30-year period. What if you live past 100, which could certainly be a possibility that you need to plan for. It doesn't factor in a lot of risk. So I hope you found this helpful. This is the Parkmount Financial Partners YouTube page. If you found this information interesting and helpful, hope you'll subscribe so that you can follow along for more of our adventures. And if you are planning for retirement or in retirement and questioning on what you need to be doing to be effective and make your retirement last, please feel free to contact us, visit our website, check us out, and I know we'd love to hear from you. Thanks for your time, and until next time.